The attacks have caused freight rates to spike to $10,000 per 40-foot container in just 1 month. That's as many consumer shippers divert vessels to other routes, such as the Cape of Good Hope around South Africa, which adds to both fuel costs, labour costs, and increases the time it takes to transfer goods, hence increasing their prices. It's also seen traffic in the Red Sea nosedive. Shippers do not want to take on the risk, and vessel insurance for passing the strait has soared. The knock-on effects have caused Egypt to increase transit fees through the Suez Canal to make up for the shortfall. That's as the country's foreign currency reserves plummet. And it's not only sea freight that's being impacted. Air freight costs are expected to get higher too, as global trade flows become increasingly disrupted. The shipping industry was already suffering a downturn after a brief post-pandemic boom, driven by high inventories and consumer spending pullback. But with shipping a global necessity, the bump in freight rates have analysts predicting the end of the global shipping recession in 2024.
Higher freight rates equals higher revenues for these shipping companies, and together with actually relatively low fuel prices, which I mentioned earlier, I mean, crude prices haven't really moved very much. That's a reasonably good combination, for at least for shipping companies. I think the one thing which is really holding them back from really having a vintage year like they did in 2022 is global demand is actually still pretty soft. We're due for another global economic slowdown somewhat this year. So that's the missing part of the puzzle at the moment, but certainly shipping companies 2024, a better year than the last year, probably not as good as 2022.
Over to you, Ludovica.
Thank you, Taiba. Then a lot of financial impacts from this crisis. Thank you. For more on this now, let's go to Matthew Wright in London. He's a senior freight analyst at Kepler. Thank you very much for being with us. So what's the potential for this conflict to really widen? Are there real concerns about that right now? But also, how would a conflict in that area look like?
Yeah, it's certainly a concern, but at the moment, we don't think it's particularly likely. I think what's more likely is actually just the current disruptions are just going to continue for longer, despite the fact that we've got this heavy naval presence in the area. We've got, obviously, Iran is heavily supporting the Houthis and has done for a number of years. They are very well experienced. There's been a number of wars involving the Houthis against the Yemen military and the US, and they still persist. So it's in all likelihood at the moment, despite the fact that we had those strikes by the US and the UK last week, in all likelihood, we consider that there's going to be some disruption for another couple of weeks, if not months.
Right, another couple of weeks, if not months, and we're seeing global inflation actually normalizing. Do you think this new crisis has the potential to see renewed pressures for global prices and global inflation?
Yeah, definitely the case. I think if you look at the impact that it's having on container flows, so the container flows from Asia to Europe are being disrupted. Those were some of the first vessels to really start to change their direction. So taking a longer voyage and a more expensive voyage. So there's definitely going to be more inflationary pressure on prices in Europe and the Mediterranean for consumer goods. Less so on the energy side. The disruption to energy flows is beginning to have an effect, but we're not really seeing any price impact at the moment on natural gas, LNG, oil, for example.
Right, and what's the situation like there at the moment? I mean, have all companies diverted their ships, and I'm referring to the oil industry, but also some other companies like IKEA and Maersk that we were talking about. What's the situation on the ground right now?
Yeah, so if we take transits of the Suez Canal as sort of a proxy of traffic through the Red Sea and passing through that area, Suez Canal transits are down about 30% compared with the same period before there were any diversions. And the vast majority of this is container flows, as I've said already. So they're down about 75% compared with, this time in November, say. On the bulk flows side, the commodity bulk flows, so tankers, oil tankers, LNG, dry bulk, they're down actually only 30%. So there's quite a big difference there. There's still quite a number of vessels still passing through the canal. It's about down to around 125, the drop has been about 125 ships per week compared with the same period in November.
These are really big numbers, though, 75%, 30%. And a last question on Egypt. Egypt is really grappling with the impact of all this, especially raising the waterway transit fees to try and boost income. How significant is this for Egypt's economy? Egypt has really been grappling with all sorts of economic problems in the last few years.
Yeah, it certainly is a blow. So your Suez Canal accounts for it's about 10 billion, transits. They bring in about $10 billion a year. That's around 2 to 4% of Egyptian GDP. So really, it's a not insignificant amount. Now, bear in mind, this is a short-term issue at the moment. So as I said, transits are down about 30% in total. So at the moment, this is an inconvenience. But if this were to persist for months, then this would certainly start to hit the finances in Egypt for sure.